With that, though, the S&P and the Dow within 2% of all-time highs. Let's get to Bob Pisani. Hey, Bob.
Good morning, guys. Happy Friday. Only had really two great days this week. The start of the week was pretty bad, 3-1 advancing to declining stocks right now. We're up about 1.5% for the S&P 500, and it's retail stocks doing well on those retail reports. And banks as well. Banks are having a good week. Remember, banks traditionally sell off once earnings start. That's not happening right now. But you see Nordstrom's having a great day. Kohl's doing great. Macy's doing great in the retail space. Banks also up. Goldman just knocked it out of the ballpark again. They're really pulling the earnings numbers up for the S&P 500. Energy, tech lagging, but still on the upside. A lot of banks this week, but I do want to note J.P. Hunt, big intermodal. Jim mentioned them. The important thing here is they're the one to watch when you're having logistics problems. And they reiterated what we've been hearing all throughout the third quarter so far. Demand is strong, but there are labor shortages out there. And they reference three specific areas: rail networks, truck networks, that's the intermodal system they run, and they added customer warehouses for labor shortages. So these labor shortages are limiting their utilization, their ability to keep moving things and have equipment out there, trucks, for example, and limiting the capacity to deliver. They're the whole problem, logistics problem, and the labor problem in a nutshell with J.B. Hunt. Good example here. By the way, J.B. Hunt's up 4%, got a new high on that particular stock. Bank earnings are moving the market higher. Goldman took the numbers up. I just want to point out earnings up there. We've had 41 companies reporting so far, not just banks this week. Average earnings growth, 27%. That's about in line with the estimates. The average beat is 14.7%. That's good. It was much lower earlier in the week. Goldman and the rest of the banks are bringing up the average earnings beats. Remember, historically, it was about 3 to 5%. Last few years, it's been big beats, around 11, and that's now 14. So pretty good numbers overall. And while the market is moving up on better bank earnings, the bigger banks aren't moving that much. Bank of America has had great numbers. They're up. But as Jim pointed out, Wells Fargo didn't have a particularly great quarter, and JPMorgan is still down. U.S. Bancorp still down on the week. I think the important thing is that the bank index, the bank ETF, KBE, oh boy, this has been quite a mover here. You've got to go back to 2007. We're sitting at essentially new highs going back almost 15 years for the bank index to just prior to the great financial crisis. So big move up in banks, particularly since the bottom. Finally, we've been talking about it all throughout the morning. We are waiting for the possibility of a Bitcoin futures ETF to come. I say possibility because the SEC theoretically can put the kibosh on this up till midnight on Monday. But if they don't, it's going to go through a futures ETF. Bitcoin futures will be trading on Tuesday. It'll be ProShares. They'll be ringing the bell down here. That's a futures contract. A lot of people are unhappy about this. They want a pure Bitcoin ETF. But as Gensler has indicated, there are real problems with this because we lack the regulatory oversight that they need to really control the exchanges and other things. A Bitcoin futures contract, Carl, is going to reduce that problem because you don't have custody issues. You don't have people who are having their Bitcoin accounts and exchanges hacked by cyber criminals in Russia. So a Bitcoin futures contract solves the problem that Gensler has, which is moving forward on crypto in general, but still working to get more regulatory control over the whole crypto space. Carl, back to you.